Charting man Dan McDermitt joins me now via Skype from Asheville, North Carolina. Right, Dan?
That's right. Glad to be back.
Yeah, it's great to have you back. Dan, so today our theme is, the outlook for cannabis stocks and the economy generally in the context of the 2020 elections. And you had some interesting hypotheses, theses, we'll call them. Why don't we start with that?
Sure. So it's bigger picture. We're looking 20 months out, and I'm told that in the U.S. it's a much bigger deal. We look a lot further ahead in the election than you do in Canada, and that's probably because there's billions of dollars doing their best to purchase the outcomes. But what we're going to be looking for is we clearly see that the stock market, is a fan of Trump and Republicans. It's been going up since he was elected in a very big way. So we can assume that if Trump is reelected, the market is going to be, continue to do well, continue to hold on. And that would be important for the MJ sector because, I'm always talking about correlations to the S&P 500 and how big of an impact that does have on the sector as a whole. But we can also look at the other side of things and say that if a Democrat were to win, that would be negative for the overall market, in my opinion. And we could anticipate things are going to go down due to a number of reasons. We have Democrats talking about reining in the biotech sector, reining in the big banks, reining in Citizens United, which allows for big money to have influence on politics. So if that were to happen, we would anticipate the markets would go down. But we can make the assumption that if a Democrat were to be elected, they are very likely to have a very pro-marijuana legalization platform as well. So we can assume that while the markets will be going down in a reaction to a win, we would see the MJ markets start to thrive again, anticipating that we would get accelerated steps toward legalization. So it's almost like the marijuana sector could be a hedge play to go bullish in as the market pulls back if there were a Democrat elected. Now, way too soon to look at polls or anything like that, but this is just broader picture, something to start wrapping our heads around as we get ready for 2020.
Sure. So are you suggesting then that a Republican victory, while it will be good for the broader economy, would be less beneficial to the progress of cannabis deprohibition in the U.S. than would a Democrat win?
I would say so. I think it's inevitable regardless. We're just talking timelines, and I think a Democrat would probably be a faster timeline towards legalization, towards rescheduling, getting the banking sector involved, all of the key points that we need to see for the US MJ market to start to thrive. So it would be an accelerated version of what's going to play out if the Democrats were to pull out a victory.
Sure. Do you think the scope and scale of the cannabis market in 2020 would be sufficient to offset the broader economic downturn that would be engendered by a Democratic victory as they seek to bring debt and spending under control?
Not big picture, not as far as a whole market is concerned, but if we're talking individuals, my parents are of the age of entering retirement, and so I'm constantly wondering, what are people that have retirement accounts going to be doing? And if we were to see a Democrat victory, it would be bad timing in the sense that, their investments would probably be taking a hit while they're already retired, while they're relying on that money. But if they make that hedge play and go into the MJ space, in my opinion, it will make the blow to their account a little bit less severe.
Interesting. Okay, so one of the events in the cannabis space that I wanted to touch on is we saw HEXO bought Newstrike. So that's HEXO was the larger company there, and Newstrike was the lesser company. But against normal traditions, when that kind of thing happens, we saw that the acquiring company's stock went up, as did the acquiree, which is contrary to the normal pattern of the acquiring company's stock taking a hit in the short term until it actually ingests the smaller company. Why do you think that the stock of HEXO rose on news of the takeover bid?
Well, I won't take credit for John back there, but the deal was done with no premium, and that's significant. And usually you see premium paid to the company, and that's why people invest in these smaller companies hoping to get bought out. And this is a change from that norm, and it's also a potential, maybe an omen for future companies saying, wow, we don't have as much hype in the space. Maybe those premiums are going to start shrinking a little bit. So maybe all these smaller companies, these smaller LPs that are looking for the potential of a buyout deal from a CGC or a bigger company maybe they're not going to get as good a deal. So I think it has a bit of a ripple effect in terms of perhaps lowering expectations in terms of the premiums that smaller companies are going to receive in the near-term future.
Okay. All right, Dan, so what are we looking at here?
So we've got CGC. This is a 5 to 6 week long pattern, and it's just a tightening range. And if we were going to visualize this, it would be something along the lines of a pendulum where the swings are getting smaller and smaller each time, and we're going to reach what I call, this is an equilibrium pattern, and we reach a flex point where we literally can't get any tighter. And when that pattern reaches that flex point and we get a clear break, we see a volume spike. So next week, we're anticipating this pattern is going to break. And people that draw trend lines, I'm not much of a trend line drawer myself, but if we were to do it here, you could just see visually it's a tightening range that's going to be forming. So like I said, we're anticipating a break next week. Here we are coming down towards this support here. And the key levels to be watching, 43.71 on CGC as a support level, and our new resistance level that's key is 48.01. So we are going to see this range continue to tighten into next week. We're going to see a volume spike somewhere along the lines of, let's say 12 million plus shares traded. Right now our average, 20-day average, is about 7 million shares traded. So the volume spike tells us the break is occurring, and we're going to be looking for this break to dictate pretty much where we're headed for April in terms of momentum. So I do believe, obviously, because this is the sector leader, in my opinion, that it's going to have a significant impact on all the players in the sector. There'll be some names that can, go against the grain and do their own thing, but in a broader sense, this break of this CGC pattern is going to be really important for, again, end of March into April.
Interesting. So the break that you're speaking about, is this a sign that investors are getting sort of fatigued with the diminished performance potential as a result of this consolidation pattern, and that that's going to cause some abandonment of the play?
Well, it's one thing that we don't do is we don't try and predict direction. So with these equilibrium patterns, they're very common after high volatility. So when we had this huge move back in January and February and we entered a new range, this is just price discovery. This is trying to find out, where we stand. And so we're not saying it's going to be a bull break or a bear break, but we know a break is imminent. So if we get a bull break, we're going to see shorts cover, and we're going to see bulls pile on as we look to test the recent high of 51.81. If we see a bear break, we're going to see stop losses trigger, we're going to see bears jump in, and there's a lack of support down under 41.68. So we would potentially be looking to the upper $30 area as a target from there. So it's going to paint a completely different picture depending on which direction this break does occur.
Wow. So I guess absent a fundamental catalyst, is it more likely, in your opinion, that we're going to see a break to the downside, whereas if we do see something that would be considered fundamentally significant, that the break might happen to the upside?
I would say that the break right now is favored to the upside for a number of reasons. Number one, the trend, just in the sense of where we are coming from. We're coming off of a bull move, and this is a tightening pattern from that bull move. And number two, the S&P 500 has really impressed me in terms of the resiliency of these bulls over the past 3 months since the December crash. They've held up extremely well, and we've got oil holding up extremely well. So until I see weakness in the S&P 500 or in oil, I'm not going to anticipate significant weakness in the MJ sector. Okay, do you have an S&P chart good to go there? Sure, we can pull it up. This is SPY, which is the ETF, which tracks the S&P 500. Let's clear up these lines. So just looking at the weekly time frame, again, the dump from December, we saw just a straight up V-shaped recovery with no consolidation. We finally got the consolidation we were looking for, and it lasted all of pretty much 1 week. And just like that, the bulls are right back to the high of the bounce. So holding on very strong. And at this point, for me, we're going to have to break the low of last week to see any kind of bearish momentum in this sector, or I should say in the markets as a whole. So 272.42 on SPY is a key level for me. And if we were to pull back into next week on SPY back to the low 270s, that's a scenario where I could foresee CGC breaking bearish. Cron is also at a pretty critical point in terms of coming up on a couple key supports, 1950 and then down to 1872. These are US numbers. But again, once those levels break, if they do break, there's a lack of support immediately below those levels, just like there is on CGC. So bears could get a little bit of follow through if that is indeed how it plays out.
Looking at the large cap cannabis companies, it seems like they're all sort of falling into this this pattern, this equilibrium pattern after the big spike in the first quarter of 2019. And is that more or less indicative of the potential for another summer downward drift absent sector-wide catalysts?
Yeah, we're definitely looking for that. Seasonality has been a big part of the MJ sector for quite some time. We've talked about it on your show here in the past. So it is, I mean, and it's almost a self-fulfilling prophecy to a certain degree, where this is the narrative that we're seeing in chat rooms and in social media groups that are concerned with this sector. Just, you know, people are expecting that perhaps sell-in may go away is going to be occurring in this space. And for a lot of names, I mean, it wouldn't be a significant red flag if we were to see consolidation. Just looking at Cron, the run that we saw back at the end of the year, I mean, we could pull back into the upper teens and still be just fine on a longer term picture with how significantly we have run. I mean, just looking back, we ran to 1530, we gave back 50% of that move and then saw continuation. So if you are truly long term and you're looking out, you know, 3-5 years plus, then weekly consolidation and a bear break of these daily patterns wouldn't really be a major concern at this point.
Wow, Dan, fascinating as per usual. I always learn so much when I'm talking to you. We're going to leave it there for now. I'll come back to you next week. Thanks so much for your input as usual.
Thanks, James. See you next time.